Soldiers, Bitcoin might be bleeding, but the real drama is unfolding on the Ethereum front. The prince of crypto is in free fall, losing key support levels one by one. Investors are in shock, portfolios are burning. But in the war room, we do not cry over red candles, we ask why. Today we expose the great trap behind this crash, and the scary target the charts are whispering. The data does not lie. Before we start the operation, remember the golden rule. What you hear here is strategic analysis, not financial advice. Do not try to catch a falling knife. Risk management is your shield. Keep it up. Now, let's X-ray Ethereum. First, look at the big picture on the daily chart. The situation is dire. Our major rising trend line, the black line, was broken, and after a brutal retest, the crash accelerated. Right now, price is clinging for dear life to this yellow support line at $2,139. This is the last stand. If this yellow line breaks, there is no structure below to hold us. We are standing at the edge of the cliff. Let's zoom into the 4-hour chart. We are in free fall mode. Price is struggling around $2,137. The RSI is down to 28, deep in oversold territory. Normally, you would expect a bounce here, but the bearish pressure is so dominant that the bulls can't even lift their heads. Every attempt to rally gets hammered down immediately. So, why won't the selling stop? The answer is in the data. Look closely at the Coinalyze chart. While the price is collapsing like a waterfall, look at the long/short ratio, the green line, at the bottom. It is at 74.5% long. You heard that right. While the market crashes, nearly 75% of the crowd is stubbornly betting on a rise. Will the market maker pay these people? Never. As long as this ratio remains this high, as long as these stubborn longs are not liquidated, Ethereum cannot recover. Where will these longs capitulate? The heat map shows us the target. Right below the price, in the $2,000 to $2,100 region, there is massive liquidity waiting. See those bright yellow lines? That is the market's magnet. My prediction is clear. The market maker will likely drive the price down to wick into that $2,000 region to flush out that 75% long crowd before we see any real reversal. That is the reality for Ethereum. A massive 75% long trap and a target of $2,000 on the table. But the war is not just on Ethereum. The other fronts, AVAX and Solana, are also facing critical moments. Are they surviving the bloodbath? Let's move to AVAX. We now deploy to the Avalanche front, and the name is fitting today. It is a total landslide. The price has collapsed from the highs and is currently trading under $10. But why is there no bounce? Why are the bulls absent? The data reveals a massive crowded trade that is dragging the price down like an anchor. Look at the daily chart. This is what capitulation looks like. We are trading around $9.86, completely in free fall. There is almost no support left here. The only real structural floor I see on this chart is the historical low around $8.50, the red line. Until we hit that floor, we are drifting in no man's land. Now, here is the smoking gun. Look at the Coinalyze data. Just like Ethereum, the crowd is trapped. The long/short ratio is sitting at a toxic 73.4% long. While the price makes new lows, retail traders are aggressively buying the dip. The market maker sees this. They know 73% of the market is offside. They will not reverse this trend until these longs are puked out. So, where is the pain point? The liquidation heat map lights up the path. Right below us, between $9 and $9.50, there is a thick band of bright yellow liquidity. That is where the stop losses are hiding. The market is magnetized to this area. I expect a flush down to $9 to wipe out that 73% long crowd before we can even talk about a bottom. The verdict for AVAX: do not be a hero, let it hit the $9 target. Now, we move to the final battlefront, the chain that usually leads the market. Solana. Is there any hope left there? Let's check the charts. Finally, we arrive at the Solana front. Soldiers. Usually Solana leads the charge up, but today it is leading the retail crowd into a massacre. If you thought Ethereum's numbers were bad, wait until you see this. Solana is flashing the most dangerous signal on the entire battlefield. Look at the structure on the daily chart. We broke the major rising trend line and the price is currently trading around $92. We are fast approaching the historical support zone between $85 and $90, the yellow box. But will it hold? The momentum on the 4-hour chart is non-existent and the RSI is buried in the floor. Here is why I am calling for extreme caution. Look at the long/short ratio on Coinalyze. It is at 83.1% long. This is insanity. 8 out of 10 traders are long on Solana while the price is crashing. This is the most overcrowded trade I have seen in months. The market makers have practically zero incentive to reverse the price here. They are incentivized to keep pushing lower until these 83% capitulate. The liquidation heat map confirms the hunt. We have massive liquidity clusters building up right below us, leading down to the $90 psychological level. With 83% of the market long, a wick down to $88 to $90 seems almost inevitable to flush out this leverage. Soldiers, let's consolidate the intelligence from all fronts. The pattern today is identical and deadly. The price is dropping, but the crowd is stubbornly buying the dip with leverage. Ethereum, 74.5% long. AVAX, 73.4% long. Solana, an unbelievable 83% long. The strategy is clear. The market is too heavy. It cannot fly with this much dead weight. Do not be part of the stubborn majority. Wait for the flush. Wait for the capitulation. As always, this is not financial advice. The market can remain irrational longer than you can remain solvent. Protect your capital at all costs. If you want to trade with the data and not the hype, you know what to do. Smash that subscribe button and join the war room. We don't guess, we prepare. War room dismissed.